Hey folks, Monday the 17th of July 2023. So we're just going to start a new format here with the videos that we're putting out. So we're not going to do the daily look ahead anymore. We're going to just start the week off with a more robust weekly look ahead. So without a further ado, let's get into it. So we have the weekly calendar here. As you can see, pretty quiet day today. 24 minutes coming up. The New York Empire State Manufacturing Index. Tier 2 data coming out negative 4.3, expectation price 6.6. But really, not the day to be trading really here. So what we want to be looking at really is kind of Tuesday and Wednesday, and we'll get on to really why Wednesday is the bumper day here. But you see tomorrow, US session core retail sales, industrial production, retail inventories, but then some earnings from the banks as well, coming out as well tomorrow and really largely this week. But the big cap tech names really coming out on Wednesday here, with European core CPI in the morning, and then building permits, housing starts, DOE to come through Wednesday here. Thursday, again, initial jobless claims, tier 1 data, and existing home sales, and then a pretty quiet Friday to finish off the week. Okay, so really, as we look ahead here, as I was saying, coming into Wednesday, I thought this was, as we come into earnings for the year, I just thought this was pretty interesting to look at the current asset class return total to date. And so you see BitBook up 55.3 year to date there, stocks returning about 15.3. Gold was the worst trade ever in 2022. I think it officially was the worst trade. Oil was the best. But now it's back and makes a bit more sense now, although I think we might want to be net sellers on gold. But let's see. And then investment grade corporate bonds, blah, blah, blah. Okay, bonds not doing great. And oil, yeah, well, no surprises here. The oil is now the worst performing asset this year, down 5.6%. We've had not one but two Saudi oil cuts of 1 million+ barrels, and oil's, while it's certainly been bid over the last kind of week, as we come into the second half of the year, we still need to see some more gains. And obviously there's been some shocks this morning to the oil market, with Europe's oil and gas index reverses earlier losses after Saudi Arabia says to extend voluntary cut to end December 2024, last up 0.5%. So yeah, this is just really a headline that had come out saying that Saudi Arabia was to extend its million barrel cut, now 2 million barrel cut total, to the end of December, next year. And so you saw pretty much massive up and then back down on oil on the back of this. And we're going to be looking at the oil chart here a couple of times. But if I switch over onto my 30-minute chart here on oil, and just going to hide some of these drawings. Just get over here. You can see really oil taking that big spooky push initially up to the 76.10s here, and then taking it all back, putting in new lows on the session when that headline was then removed. And we're going to talk about oil here in a second in a technical aspect, and look at the charts, and that'll be interesting here in the daily bars, right? And I am very bullish on oil now, but let's just kind of get back to some of the headlines here. Anyway, looking at the earnings, really, some good stuff to come. Tuesday, you've got Bank of America, Morgan Stanley, a bit of pharmaceutical with Novartis there, Schwab, New York Bank of New York Mellon. But really, it's coming out into Wednesday here. You got Tesla, Netflix, IBM, who are those guys? Goldman Sachs, what else? Kinder Morgan. So a bit of energy stuff going on here as well. And you've also got Discovery Financial and what are they called? Syncofi. Financial as well, I think, reporting here this week. Yeah, Synchrony Financial. So they're the two largest credit card companies in the US, providers. But so the big wigs, anyway, to report on Wednesday here: Tesla, Netflix, and as the week draws on, what do we get here? Friday, American Express. Yeah, nothing too crazy there, but busy enough for earnings. So let's kind of get on to some of the news that I really wanted to look at that will be impacting markets. Obviously, now in Europe, we have this crazy heat wave coming through. We're looking at Sardinia temperatures to hit 48 degrees this month, or this week, and hitting 40 plus degrees across Italy and Spain at the moment, and the guys on the Tour de France feeling the effects of that one, I would say. So I don't feel like I'm missing anything out there, but I think what we've seen in the States is we've had a heat wave come through. It's cooled down a little bit last week. And what we saw was, a little bit of a bid coming into nat gas, coming off very low levels. And then a dissipation kind of Wednesday, Thursday, Friday of that bid, like a pullback coming in. So if we go over and have a look at what happened there, let's see. Yeah, just here on my nat gas chart, you'll see. Actually, if I go to a daily on this, let me switch over here. We'll just get that one down there, and then we'll pop this one up here. Yeah, nat gas. Just on the daily bars here, you see that we kind of have been generally kind of holding a bit of a bid up here, and just the key rejection points above, pulling back, and eventually this market is trying to find buyers around the 2.5s to then what I think is going to be a test back to the 2.9s and above as we push through the second half of the year. So obviously, if we can't hold the 2.5s even, I think we got to go down to 2.4s. And it's going to be a big question mark if we can hold then really above the two handle, and broadly speaking, as I think we're going to be assaulting the two handle. Now, we've had a narrow escape there back in June, May. Everyone's talking about and for good reason. I think there's way too much supply of nat gas out there, and nobody would disagree with that. But Europe is now looking to the US for nat gas supply. Obviously, with the war situation being the cause of that, and I think it is time to drain down the glut of nat gas that's out there. And so, look, I'm bottom fishing here, and am I talking my book? Probably, yeah, a little bit talking my book, but I mean, I'd be the first one to be stepping out here if I thought this was major danger, Will Robinson, and I just don't think it is. And I think, as we look towards the autumn time, and we look towards restocking the plants and shipping to Europe as well out of the US Henry Hub, I think I'm looking at this, and there are some pretty good key levels coming in to support here, and we're seeing green shoots of buyers coming in. So, look, a heat wave in Europe, does that mean that we're going to be buying more gas-powered air conditioning units? Well, we're not really big into aircon in Europe. Well, certainly not kind of Western Europe or Eastern Europe. But, that's a different conversation and something I'm not too keenly aware of. But, really some of these temperatures set to get out of control here, and certainly Spain and Greece. All right, moving on. The dollar, the dollar has been absolutely beaten to bits, simply because the Fed are looking to kind of potentially stop with the hikes here, and I think the risk then well, broadly speaking, I think the bid that was in the dollar was there to de-risk any recession fears that there were for North America. And with that, it looks like we're going to have the soft landing, and it looks like we're going to have to give Jerome a big pat on the back, and a round of applause. And so therefore the dollar doesn't really have too much of an existence anymore in a de-risked sort of economy for the US. I mean, Europe may already be in recession, and so then we can start to price in things may be getting a bit better. You know, the Fed are they're talking about already on the squawk here, and Bloomberg they're talking about the next Fed meeting being the last hike that they do. Personally, I think they will like to have the optionality to do to react to changing conditions and changing inflation readings. So I think they'll maybe take a pause and kind of leave the option of maybe two more rate hikes on the table for the rest of the year. But who knows? Who knows? I'm not like a Fed watcher. I'm not the smartest guy in the room when it comes to Fed. So, but I just know what I can see and what I hear from Jerome. But looking over on the dollar here, you can see we're pretty beaten up the last week here. Well, this is 3, 4, 5, 6. Yeah, so the last week, off a cliff. We're down. I don't know how many from the breadth from the top to bottom here in the last kind of 8 trading sessions is 3.69%. From the little pullback I put in there on the 5th of July. So, I think might be time for a pullback, and we have some key levels to look at here on that. Pulling back to 100 spot 57s, I think may be met with some rejection. But I think, if we can find a support base somewhere around here to have a little bit of a pullback and then a test into the 100 spot 77s, then I think we may resume the selling from there. If that doesn't work, I think the selling will resume from 101 spot 20s above here. Big trouble area, I think, for the dollar on a pullback here. But if we zoom back out, you can see, that the low that we put in here on the 1st of Feb 2023 and the low we put in also here on the 13th of April 23, while, we've had tremendous bids up off of these areas, it's shot in the ass as of last Tuesday there. And, I think the CPI's coming in Friday, 3% miss on 3.1, well below the prior 4%. PPI's coming in really nice and soft there as well. ADP big beat last week on the employment, a mild miss on the headline NFP figure, but the economy looks great in America, really, by comparison to what talking heads would tell you, which is the recession is coming to get you. So net, the data is saying we don't need the dollar to de-risk onto at the moment. So I'd be selling around pullbacks here, and I think the pullbacks will be quite deep. So I think we'd be talking about this 101 spot twos area probably next week, right? So getting back to kind of what we should be looking at going forward as well. It's really now moving over onto oil. So look, oil's been really beaten up, and the whole picture, this really started last year, and you could go as far back as when it went negative in April 2020. But really, the supply and demand picture is so skewed to the wrong side of the ledger at the moment with oil. I think we're just getting into an incredibly tight oil picture situation at the moment, where you're seeing of late now, recently, the bid that we've had into oil over the last kind of week, taking us from about 73s up to 77s there last week, and we're now back to 74 halves, is being that Libya had taken their Sharara oil field offline. Just kind of, if we refer this article here from oilprice.com, from Tom Cool, fantastic name. But, there is essentially a lot of dispute over how oil royalties and money essentially gained from oil production in Libya was going to be distributed across, through the country, who were going to get the dividend, who was going to get the dividends, etc. And so you saw a walk off from the I think it was the Sharara oil field, and that cut off 300,000 barrels a day of oil from global supply. So obviously that's a huge amount to just get gone overnight, and so therefore you saw a bid persistent into oil. Then you're seeing this headline this morning come through, that OPEC are going to extend their cuts through December 2024, which would then just tip the scales into like an incredibly tight global oil supply picture. Okay. The rig counts are slightly on the bounce back. Let's not get too carried away with using that as a leading indicator. It's not a tradable event. It's really just news confirmation using the Baker Hughes rig count. But yeah, look, I think this is gone now, right? And so we're kind of talking about, really the tightness in the market. And so I'll be posting these articles in the room to have a look at. But you're seeing, cuts and rising demand going to drain down on any fuel inventories, and the price rally will be, I think, persistent. You've got Russia now cutting back on oil. So Russia were to blame really for a lot of the reasons why oil hasn't gone up so much this year. I don't know if we have any charts in there. Yeah, because essentially, it was a tight oil supply picture. A lot of people are expecting, well, because there's a war in Ukraine, there's going to be less oil coming out of Russia, when in fact they were actually, the IEA had huge predictions that it was going to be greatly diminished Russian oil production, and it just wasn't. They got that seriously wrong, and Russia has been selling oil out the back door to India and China, hand over fist. So, now we have Russia playing ball as part of OPEC Plus. Of course, they are the plus part, and so they're now cutting 500,000 barrels a day. So it's now real. Okay, so we're really gonna have to price in the reality of much higher oil prices here. So I've just kind of highlighted. I'll just kind of put this on here. We can show you. This is the gap up that initially we had here. I would say won the first million barrel cut from OPEC. And it was short-lived, really short-lived. The guys in the room will tell you I was frothing at the mouth for where this was going to take us, and I was in a spread on this, really nice spread, held it all the way back to close on the gap, and then you can see here it just kind of closed the gap, pulled back a wee bit, and then tried to come back inside the gap and just bang, rejected down there in May, and down she goes. Now we're in a situation where you have another million barrels cut, and now we're starting to get up here. Plus you saw that Libyan supply offline. I think that's the bids that we saw from in here. It's probably actually really just 2 days of bidding, because the protests in the Sharara oil field were last Wednesday, Thursday. Getting priced in there, but all to note really. So look, I think generally we can kind of eye up this trend here that we've had since we went negative, right? So that there to then these lows that we saw back in March, right? And you have seen the market respect the trend a certain amount. And so look, we pulled back to here on the lows of today. I think we could probably see a little bit more on the lows today. But I'm fishing here to see, if we do reverse down into 73.28s, will there be buyers there, and can we start to do a bit of this and then testing the 78.85? So these are key levels for me to look at this week. I think 73.28s, 74s for sure. And then 78.85s as we push up here. I think there's a lot of headwinds at the 77.25s. If you know, guys in the room know, 70 the QH 77.25s there. So yeah, just bear in mind that's kind of where I'm looking to be long or seller on the 73.28s, but looking to be buyer on the 73.28, 74s, and then as we push into 77 quarters, I don't really want to take a trade on 77 quarters at all. And then if we push into 78.85s, I'd be looking for a bit of scalping on the short side, maybe a 1 day pullback, maybe 2 day, 3 day pullback. But then again, as we bottom out towards the bottom of the gap, then I'll be looking to get long again towards 81.04s. Yeah. So that's it really on oil and some of those key levels I want to look out for this week, and that is it for really looking at the headlines and the big drivers. These earnings will obviously be driving equities as we go through the week, and looking over at equities, we look at these are all daily bar charts here we're looking at. So here's the Nasdaq. So you got the all-time high up here coming through. Don't know what that is there. Look, the all-time high at 17.3s, we'll call it. But really, what do we have here? Saturday. These are weekly bars. As you can see, we've had this nice push above the 15,234s, really testing into some of these earlier levels around here back in March. and January, February, and we're kind of just stalled there, the 15.778s, and maybe it's time to just dip temporarily dip back in on this weekly bar, pick up some of the buyers from this area here that we were probing into 3-4 weeks ago, and then push again further higher. What are we going to need to see for that? Continuing good economic data. And we're probably not going to want to hear the Fed talking about another hike. We're going to want a dovish Fed. We're going to want data that feeds into a dovish Fed here. So going back to the daily bars, for example, on this, quite a lot of data to load. I'll probably let that simmer a while. Meanwhile, here on SPOOs, trading 45.30s at the moment, just kind of pulling back a wee bit. This historical 45.42's half resistance, bit of a doji blowout on the tops last week. I think it's time to come back, last Friday precisely. I think it's time to come back here on equities, pick up some buyers at either 44.78's half, and then go. Or else we come back here, buyers try and pick it up, they fail, and then we want to be actually seller on the 44.85s. But I don't want to be wholesale seller on equities under these current conditions and under this sort of economic data. But if I kind of go out to like a weekly bars here, you'll kind of see, where we sit. This is just really a high that we got in the week of the 28th of Feb 2022. That we're testing. So, it could just be a little bit of a pullback area and then get long and don't be wrong to go higher. So key levels for me on the pullbacks, 44.78's half, and then below that 44.02's, and the 43.28's half. So I don't think we need to retrade 43.28's half. If we do, I'd probably be thinking I want to be more long than short. And I think I'm sort of starting to believe we might have the pullback to the 44.02's to then load up the bus to go higher. But do not mess with this 45.42's resistance that we see at the moment. It's real, and I think it can easily lead us back down to 44.85's on SPOOs. Just to finish off on the NASDAQ there. So here we are in the dailies. Again, the same way we have that 45.42's on SPOOs. We got the 15.788's and a doji on Friday. So maybe just a little bit of pulling back into probably some of these areas here, like the 75's, 475's, 432's on NASDAQ to then go on. But ultimately, I think if we go out, the breakaway point here for this market has been the 14.593s for buyers. So if we do have an all Hail Mary of a pullback here, I'd be loading up the bus on the 652s to get long and drive towards potentially all-time highs on NASDAQ. But we got the earnings, so you don't have to be apprehensive. You don't have to be sticking your finger in the air to try and get this thing right. Moving over onto the Dow. Look, here's the daily bars, right? And you're thinking, well, what's this trend here, Tim, that we got? Before I go over onto that, I'm looking at areas that we can pull back to and find buyers. Ultimately, I think 34.174s, it may flush here, but again, with trading, it's all about the timing, all right? You can have a great level, but if you don't hit it at the right time, you may as well be wrong on the level and the accuracy by a country mile. All right. So I like 34.174. Should we start to pull back here? I don't think it's going to go that deep. We've got some big caps. We don't actually have that many big caps. Constituents of the Dow earning this week. A couple of the oil majors maybe are in there. But 34.509s, I think, for a shallow pullback and then get going long, targeting 34.847s and the hollow ground of 35.397s above. But yeah, I want to show you this weekly bar chart here, right? And look at this, okay? Look at the trend we have here and look at where we're stalling for the 1, 2, 3, 4, 5, 6th week, okay? So I think the pullback is on. And I think generally not the 34.174s, but actually the 33.852s has generally put in the low of 2 of those 6 weeks. Okay, so what do you want to do here? What do you want to do? Do you want to be plowing into the longs, right? When you have 6 weeks here of historical sideways action, you might be thinking, oh yeah, I thought we're just bid up going to the moon. Well, over the last 6 weeks, no. All right, we're stalled out on this trend. Okay, so if we zoom out a little bit more, we'll lock this in, zoom this out. You could be thinking, hold on a second. Well, I think, look, I think it's a pretty decent probability we're coming back to at least 34, 174s this week on Dow. And then we can talk about other stuff as we breach, as if we breach that to the downside. And 33 679's ultimate support here on the Dow for the moment as we reject this trend. So we'll just pop that back to a daily and kind of go back to what we've been doing. Oil, yeah, we kind of had a look at oil there at some levels. Nat gas, I did want to show you some levels on nat gas here. I do like the longs. I did say we need to hold 536s, and I think today we're targeting 632s. I just don't want to see that much resistance come in at the 632s. I haven't looked at my nat gas here, but I would be probably. Oh, actually, there it is. There, I may be convinced into buying here, targeting the 632s and higher. But it just didn't work out last week, as you can see, on a couple of these days. And so just tread carefully out there on nat gas. But I do like the story that's kind of potentially unfolding there. Gold, yeah, gold is kind of interesting as well. Daily bars here on gold. If we kind of look at the market a little bit like this, I think gold, it should we test into the 1975s. I think that's a hard sell. But there would be, I was looking at 65, 66s for shorts, as was Matt and a couple of us last week. Didn't get them, actually. Did we get them? We got the 64s. Yeah, we got the 64s. But we didn't really get that 66s on the higher level. So, I think if we push up, there's major resistance waiting for us up here, guys, around 1976. Above there, 1993. Would I want to be seller up there? Yeah, maybe on a fade on the intraday, but not a short or medium term hold by any means. But I think generally the most probable thing here is we just kind of rotate back and back up, back down and back up to 39s, back to 61s. All right. Anything else to report? Well, Bitbook, not really. Bitbook, it's kind of interesting. Best performing asset of the year, 50% or 55% returns here. But listen, we're just working this area on Bitcoin, so we'll pull back on the 28 157s or 27 650s. I think there'll be buyers there. There were sellers. I think now there'll be buyers. Just keep an eye out for that one, really. Just keep an eye out for that one there on Bitbook. All right, that's it from me for another pre-US session. Thanks for tuning in. And if you're interested in getting our daily look ahead and really more up to date every day, please do join us at Duggan Capital. Just go to whop.com, WHOP.com/Duggan Capital, or you can go to DugganCapital.com itself, the website. And please do click to like and subscribe in YouTube. It really helps. And otherwise, stay lucky. All right. Have a good session. Have a good week. Talk to you later.